The SPX breakout target is 6270, but can it get there? So the SPX is finally broken out, but the real question is, can it hold? Here's my setup. So the breakout is confirmed. I've got a target of 6270. The hedge trigger is set at 6100 in case that fails. The Bollinger Bands, which I like to use, they're really tight, making setups using just that, fast and probably unreliable. So I'm using my 6 money making patterns until that volatility expands. So for now, it's a waiting game, but it's the good type of waiting for profits. Anyway, let's look at the charts. So the breakout is confirmed. We had that breakout pullback. It meandered sideways for a couple of days, pre and post holiday. And we have yet another breakout pullback type of setup there if you weren't sure about this first one. So ultimately, scenario number 1 has unfolded, and that gives us that breakout target up at 6270. We get that from the height of the range added to the breakout point. So basically it's just the depth of that prior range, we add that to the breakout point. Now that means that as scenario number 1 is unfolding, scenario number 2 actually becomes the hedge trigger, so we don't disregard that now at all. What if this doesn't break out? What if it doesn't continue? What if it fails? So scenario number 2 actually becomes my hedge. So that's what I'm looking at right now. So should we see that fail, 6100 becomes the point where I can start to hedge the trade and start thinking about profiting from that downside movement, so we still get some usage out of it, even if that breakout fails. And that would give us a bearish target still down at the range lows at 5970. Now the big question for most people who follow me is, why am I avoiding the Bollinger Bands at the moment? Nothing wrong with the Bollinger Bands, it's just that we're going into another, if you look down at this bandwidth at the bottom here, we've got another pinch point. That means that we've got the Bollinger Bands exceptionally narrow, and they've already been narrow, and that's highlighting this consolidating, this tightening price contraction that we've seen for several days now, well, to be fair, several weeks. And it just means that the distance between the upper and the lower band is just too narrow. So I'm going to keep using my 6 money making patterns instead of the Bollinger Bands, just until that price volatility starts to widen and the reliability of the setups and the Bollinger Bands becomes a little bit more reliable. Here's a fun stock market fact. Did you know that in 2018, Amazon briefly became a $1 trillion company, but it stayed there for only a few hours before dropping below the threshold? The lesson here is that even the biggest breakouts can be short-lived. Just because a stock or an index makes a new high, it doesn't mean it's going to stay there forever. So always have a plan. Targets are good, but hedges save you pennies, and they do matter. And if you're sick and tired of watching the charts all day, what if you could just trade a strategy in just minutes per day with a system that actually works? It's rule-based, it's mechanical, there's no trend chasing, there's just trading for income. If you'd like to learn a part of my system, one of my favorite parts of it, click the link next to this video and you can learn one of my favorite money making patterns. So click the link and I'll see you over on the complimentary training.